What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I want to talk to you guys about something that if you are not doing, you are not actively getting yourself better as a trader. Now, that one thing that I would suggest each and every single one of you guys to do after the market close, on the weekend, on your downtime, is to backtest your strategy. Now, you guys know and are familiar with a few different strategies that I like to trade each and every single week. And to be realistic, before I started actively taking these trades years ago, okay? I mean years ago now. I've been trading for 9.5 years, and I've kind of been building up my Rolodex of entry strategies. But this one particular strategy that is using the 5-minute time frame and the 20 SMA, I probably started using 4.5 years ago, and I've probably taken over 1,000 trades using this setup. But before I even took my first single trade with this one particular setup, I must have backtested months of data. I backtested probably hundreds of trades and mentally put myself through these trades. If I was to trade X amount of contracts, if I was to trade, this time of day, if I was to trade like this, where would I have been stopped out? Where potentially could I take profits? What's a good area to take profits? What's a good area to cut a trade even if it hasn't hit my stop loss? I would mentally go through these things in these scenarios because I wanted to be mentally prepared when this stuff started to play out in real time. And I think a lot of traders are not doing enough back testing. I think you're looking at 1 or 2 days, or you're looking at one time that the trade worked, or a few times the trade worked or didn't work. And then you take it a few times, and then if it doesn't work, you move on to something else. No, guys, hundreds and hundreds and hundreds of trades need to be taken before you are ever remotely comfortable just to click buy and sell on the fly. And in this video, we're going to go through just Friday's price action, and we're going to realistically look at the potential setups that we could have taken and if they were profitable or if they were not profitable. And it's going to be a very easy and simple video because there was not that many setups. And if we really look at the price action, we got one fantastic setup 5 minutes after the market opened. Now, I'm going to give you two different scenarios. One where you could have taken, a little bit of a scalp and taken a 1-to-1 trade, or in another example where you could have actually let it run for a little bit longer if, XYZ was to happen. So, we were trading below the 20-period moving average. So the 20 SMA is what I'm looking at here. That's this white line that you see on my screen, the squiggly line. So we closed over the 20 SMA at 6:35 in the morning. I'm located in California. So again, excuse me, I'm talking in Pacific Standard Time. So at 6:35 in the morning, we closed back over the 20 SMA. This becomes my reason why, okay? My reason why I want to take the trade. I call it the reason why candle. This is the whole reason I want to get into this trade. Why? We're trading from below the 20-period moving average to now trading over. This is a short-term change in trend. This is a momentum drive play. So what that means is I'm looking for momentum to shift from sell bias to buy bias when we close back over. So how I'm going to use this setup is when we close over the 20 SMA, I'm looking for the following candle to confirm the high of the previous reason why candle. I'm going to set my stop loss at the bottom, any closure of a following candle below my reason why candle. So first things first, I'm using the 5-minute time frame, and these ranges can get a little dramatic. So again, if you have a weak stomach and you need to trade smaller size, trade smaller size. But on this particular setup, the range on this candle was 43 points. So essentially, I'm going to give myself a 43-point stop loss. Now, I'm going to break this down very, very simple because I know there's going to be a lot of people out there that are going to think, I would never take a trade with a 43-point stop loss. Okay, fine. Trade 2 micro contracts. The most you're going to lose is about 150, 160, 170 bucks. If you're concerned about losing $150 or $160, you're in the wrong business. Again, you need to let these kind of moves develop. You need to, not try to just trade for, swing for the fences. Either you make 10,000 or you lose $5. Like, that's not going to happen. Let's be realistic. A realistic trader is going to try to make as much money as potentially they can lose. So if I'm willing to lose $150, let's call it for the sake of the video, we're looking at a 43-point range. We're looking at around $85, $80, $90, let's call it. We're going to lose. I'm just going to make this very simple for you guys, so I don't have to sit here and bring out a calculator. This particular trade, we're looking to lose less than $200, okay? We're going to lose less than $200 if we lose this trade. Now, what are we looking for to make on the win side? Well, we're looking to make just a little under $200. So I think that's a pretty good risk to reward. If we can, put up some cash, whether you're trading a prop firm or you're trading personal, and we can put up, risking $200 to potentially make $200, I think that's a fantastic opportunity. Now, you're going to notice here that this is going to hit a 1-to-1 here. You're going to make that $200, a little less than $200 on this particular move within a time of 6:30 to a time of 7:40. So within 1 hour, you just made $200. I don't know too many 9-to-5s unless you are a doctor, lawyer, you have some type of unique skill set, some special trade, where you're going to make much more than $200 an hour. So I think this is a fantastic trade. Again, let me make something clear. If you do happen to be on the right side of probabilities and you make $200 in less than an hour, I want you to do me one favor. Turn your computer off and walk away. I do not want you to sit here and continue to look for more trades, because that's when you're going to start to get profits away. I want you guys to compound those gains over time and then take a payout at the end of the month. Now, the second trade that happened here is a break over first hour highs. Those of you guys in Evolution Traders, if you guys are not in Evolution Traders, I would recommend you joining my Discord community where I offer mentorship and I go over the rest of the strategies. But this is a big strategy that I use. It's looking at the opening range, that opening 30 minutes, that first hour candle, and I'm looking to take the breaks and confirmations over or under. So if we take out the highs, I want to be long. I'm going to use a previous 5-minute candle as a stop. I'm going to target the previous 5-minute candles range. So if I'm looking for 45 points, you would have essentially taken 45 points there. You could have taken 45 points here, 45 points there. You could have potentially taken 90 points out of the market. Guys, you're talking about almost $400 in gains within a matter of a couple of hours, a few hours here after the market. That's huge, right? That's monster gains, right? You can take out 90 points. Guys, I'm not talking about ticks. I'm talking about points. We're talking about pulling 40 points, 90 points. Now, again, let me make something very, very clear. It's going to be very, very difficult to do this if you're trading large size, meaning you're trading multiple mini contracts. Why, you ask? Because if you're trading on a prop firm, you're not going to have that much wiggle room. Sometimes these things pull back 10, 15, 20, 25 points before they get going. If you're trading in a prop firm and you're on a small account, $25,000, $50,000 account, you're running the risk of blowing up that account and hitting your max daily loss limit. So it's very, very risky to do it on large size. But you can do this all day long trading small size, micros, sub 5 contracts on the micro side of things. And the next setup that happens here is a large pullback candle here, 83 points. It does confirm, and it would have been, technically not stopped out. I mean, it does, break over the previous reason why candle, but it doesn't really close over it, until, later on in the day here, closer to 12. Technically, this would have been a stop out. But again, something that I teach in Evolution Traders, we want to stay with the trend. Now, notice this, right? How do we know the trend, right? Because I know there's some smartass out there that's going to be thinking that. Guys, I'm just going to draw a line here. Does this trend line that I drew, does this look like it's going up or down? Is this trend line going sideways or is it going down? Is this trend line going up or is it going sideways? I would say that it's going up. And being that we're trading over a previous day, being that we're trading over first hour opening range highs, I want to ignore the short setups, okay? So we have to be smart human beings and disciplined with our money. We can't just take every single setup just because it's a 20 play momentum drive play. You got to be smart. Don't be an idiot. Yes, I said it. Don't be an idiot. What does an idiot do? They just try to take everything underneath the sun and think that everything's going to work. Stay on the right side of the day's trend. The day's trend was higher. Ignore the short setups. Get back into the long. This range here was 32 points. The high price on this setup here was 17,713. The high price that we hit here was 17,739. You would have taken your 30 points here on this move as well. It would have been a 1-to-1. Again, here's a short setup that does confirm on a following candle. But guess what, guys? Is the trend up or is it down? The trend is up. We're going to ignore the short. We're going to ignore the short. We're going to look for the long. The long happens here at 1040. It's an 18-point range. It does hit for a 1-to-1. Guys, winner, winner, winner. You guys could have essentially taken out 50, 60 plus points out of the market on Friday if you just simply traded with the trend, allowed these 20 SMA momentum drive setups to formulate, take them when they confirm, set a 1-to-1, and you could have taken over 60, 70 points out of the market. So again, I want you guys to do this on your own. Go out there, back test. I don't care if you're trading the NQ, the ES, you're trading crude oil, you're trading corn, you're trading soy, you're trading stocks, you're trading options. It doesn't matter. Please, back test. Mentally put yourself in. Tell yourself, if I take this trade, where would I get out? If I take this trade, where's my stop loss? If I take this trade, where's my potential take profit? What does it look like? What does an uptrend look like? What does a choppy market look like? What does a downtrend market look like? Well, Friday looks like a visible uptrend from the start of the market. Open, right? So do I want to take short setups? No. So when it comes time and you're trading and you start to see an uptrend and you get the short setup, you can do what, guys? You can ignore the short setup and wait for the longs. Guys, if you want to learn how to do this and you want to start passing these prop firm evaluations and you want to actually start taking payouts, or maybe you trade a personal account and you want to actually start growing this account and start making some cash, but you need a little extra boost, you need a community, you need more strategies, you need help, mentorship, join me at Evolution Traders. I'll do my best to get you guys on the best and fastest route possible. That link is down in the description box below. To everyone else, like, comment, and subscribe. I'll see the rest of you guys on the next YouTube video.